Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Monday afternoon, we have Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. Brian, it's great to see you as always. Welcome back to Trade Talks. And I would imagine as a technician, could have either been a dream or a nightmare, depending on what side of the tape you were on, because last week we're all-time highs on Monday. We get the headlines over COVID. We saw what happened on that Friday. And then you didn't get that follow through this Monday and kind of seeing highs that we stand, towards the end of the session.
Yeah, it's certainly been, a volatile week, to say the least. Typically, the last Friday the Friday after Thanksgiving, it's a half day. Most people on vacation. There's not a lot of volume taking place, and with the COVID news and the setup going into Friday, it was a bit of I don't want to call it a perfect storm, but there was some signs there that there was the market may have been on some shaky footing, and that COVID news, was just a big factor in the sell-off. And it wasn't just equities that sold off. We saw crypto sell off sharply. We saw oil go down 13%. If you exclude March, April of last year, at the peak of the pandemic, it was the biggest oil decline since the famous Thanksgiving Day massacre back in 2014, when OPEC opened up the spigot and flooded the market with supply. So it was, worse than that day. So certainly, a lot of activity going on. And I know we're rebounding today, but I don't think we're out of the woods yet, so to speak. I think we still have a lot to prove before we can, before I can feel comfortable in that the uptrend is resuming, at least in some sectors.
Right. And Brian, it's so interesting because whether you're a technician or you're more of a fundamental analyst, it's kind of like when you get a headline like that out there, no matter how much kind of work you do, it's really hard to implement that work and get that kind of expected 2.5%, 3%. Well, granted, we're only 2.5%, 3% off of highs in the market that's overextended anyway. But still, that's kind of a larger move than normal, especially expected on Friday after Thanksgiving. So with that said, let's pull up your Bloomberg here. Let's take a look at some of the indicators that you're watching to determine if this was just a blip in the headline radar or if it could be a sign of more things to come.
Yeah, and again, I think the reason for the outsized move on Friday was because of what was going on in advance of Friday. We saw fewer companies participating in the breakout to new highs. So on that note, here we're looking at a chart of the Nasdaq-100. In the lower panel here is the percentage of the index with members making new 52-week lows. We typically look for new highs as confirmation of an index making new highs. We want to see percentage of members also making new highs as well. But when the index last Monday, which was the day, by the way, President Biden announced his intention to nominate Jerome Powell again for the Fed chair, the market, the Nasdaq-100, the S&P 500, both indices broke out, gapped higher on the open, and they made new all-time highs. But after that announcement came out, the market reversed lower. We had somewhat of a hawkish reaction to it, where short-term rates moved, sharply higher, and growth stocks started to underperform value stocks. And we look at the Nasdaq-100. Now, there's only 100 companies in this index, but on Monday, when the index was making new time highs, we saw about 4.5% of the index, almost 5% of the index, making new 52-week lows. But if we look at, say, the NASDAQ composite, where there's over 3,500 companies within the index, same thing we saw. We saw the index break out to new highs, but 15% of the index was making 52-week lows. So a lot more striking there. And I think that has to do with we're seeing a much greater weakness amongst the small cap, the micro caps, and the mid cap stocks, which is what you'll find in the NASDAQ composite. You won't see them in the Nasdaq-100. But even within the Nasdaq-100, we did see a greater number of companies, the most since March of 2020, making new 52-week lows. So I think that set up going into Friday's announcement. Now, we still don't know a lot about this new strain, but markets are going to shoot first and ask questions later. And at the very least, even if this strain does eventually turn out to be mild, we're already seeing restrictions being imposed by government leaders, not just here in the United States, but overseas as well. And so the risk there is, that's going to lead to slower GDP. It's going to continue to disrupt the supply chain problem that we already have. So the supply chain problem could add to the inflation issues that we're seeing. And at the same time, if it slows GDP, then we have a problem where, we're just fueling the risk of stagnation. So I think all of that combined has got, the market concerned here. Growth, I think, is going to fare better than value here. So this is the chart of the Russell 1000 growth index. And you can see, the recent low just bottomed at the low from 1 or 2 weeks earlier. So Friday's low held a prior pivot. But if you look at the value index, we could see it had a breakout in late October from a, let's say, 5-6 month range, and it gave that up on Friday. It's back below now. It's 50-day moving average, but this level here, 1609, is a key level, is a big major resistance level for 5 or 6 months. It then acted as support over the month of November on pullbacks, and we knifed right through it on Friday. So giving that level up to me is key. And value investors want to see the index get back above this. And so until that happens, I think there's concern out there, and rightly so. Going back to just the daily period chart of the Nasdaq-100, when I highlighted last Monday, the breakouts all-time highs, you could see that there was a bearish divergence here on momentum where the daily RSI made a lower high. We had on the candlestick on that Monday when we made new highs, we closed at the low of the session. We have a big, deep, bearish engulfing candlestick. We were down the next day. There's your confirmation. So certainly not out of the woods yet. Granted, as you noted, Jill, only a couple of percentage points off the highs. But if you look at select indices like the Russell 2000, the Russell Microcap Index, some of the cyclicals, financials, the regional bank index had a pretty steep sell-off as well. Consumer financials were hit very hard on Friday. And then on the Nasdaq-100, going back to the weekly period chart, we could see last week we had the bearish engulfing candlestick pattern. So I'd like to really see how this week shapes out, where we end up on Friday. I think this could be a pretty, I don't want to make too big a deal of it, but it could be somewhat significant this week as to whether or not the low is in or if we're going to be resuming higher. But on a relative basis, I do like the fact that the Nasdaq-100 versus the S&P 500 just in the last week did break out to a new all-time high. And if we look at growth over value, we can see growth is on the verge of recapturing its breakout to new all-time highs as well versus value.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.